Hey guys, Lori here. Let's see. I'm just kicking back on a Friday night after a very warm and busy day, and I got to thinking about how we've had some pretty big shifts going on in the real estate market over the last couple of weeks. Today I spoke to a couple of clients, a couple of potential clients, and also responded to a couple of emails with a bunch of questions expressing general concerns and questions on the market shift. So I wanted to chat with you for a minute about that. So it was a week ago today that it was reported we've hit the 8.6% inflation rate, which is the highest it's been in 40 years. If you've been thinking or planning about buying a home, this news may make you wonder if you should wait. So here's what you need to remember. In times like these especially, you want to invest in an asset that outperforms inflation, and that's where home ownership comes in. I've made this little chart. Okay, this graph shows that the average inflation by decade compared to home price growth, and I've taken it all the way back to the 70s. Blue bars are the average inflation rates in each decade, and green bars are the average home price appreciation. What this really tells us is that in most decades, housing has outperformed inflation. The big takeaway here is that history helps to prove homeownership is a great hedge against inflation. Let's see, fast forward to today and the big shift. For over a year now, we've been in this market where, depending on the area where you live, sellers have enjoyed having maybe 40 showings, followed by a dozen offers above list price from buyers who are willing to pay, well over appraised value. We're not really seeing that as much today, which is a good thing because the market cannot sustain that pace. As a buyer, and keep in mind that most sellers are also buyers once they sell, this is good news for you. There's fewer offers being made. Many offers are coming in at list price. I'm not seeing my buyers have to give away their inspection rights in order to win a contract, and appraisal gaps are becoming less and less common as well. So what this means is that a buyer doesn't need to bring as much money to the closing table. All these things are good and make housing more affordable. These corrections are finally starting to balance things out and decelerate home pricing. So now you're saying, oh, goody, prices are going to drop. Okay, well, deceleration is not the same thing as decline. Homes that are priced correctly, meaning a home that will appraise for the list price, should sell around the list price right now because the competition for that property has declined some, and the unsustainable demand is not driving the prices up like we've been seeing even as recently as a month ago. So yeah, we've lost some buyers from the buyer pool, but what kinds of buyers are those? Well, with the pandemic, people found themselves working from home and wanting or needing more space because of that. They weren't going out to eat. They weren't vacationing. They weren't attending sporting events or other types of, costly entertainments. So they found themselves with more disposable income. Now, when you couple that with various tax relief programs and stimulus checks and mortgage forbearance, which some people used to reserve their cash flow and not because they needed it due to an immediate loss of income. Plus, when you have all-time low mortgage interest rates, you can see where this plethora of buyers came from. Many buyers were buying because they wanted to upgrade, get something new, bigger, maybe just something different. Well, many were also buying because they wanted a second home or they wanted to buy rental properties. So now, with rates hovering around 6% and the inflation rate making people rethink how they want to utilize their savings and their liquid assets, those types of buyers I just described are kind of sitting tight and making room for the more traditional buyer. There's a lot of buyers ready to exit the rental market and ready to maybe get their first home purchase. Maybe even a move-up purchase, but it's still going to be the home that they occupy as their primary residence. Right now, there's 30 million millennials who do not own a home. I don't know the exact number of millennials here in the Denver metro area, but I can tell you that new construction in this area is not matching that need. So while new building permits are up here in Denver this year and last year compared to, say, the previous decade, labor and material shortages are not going to allow new construction to meet that current demand just yet. So, housing is a physical need. and rents need to keep pace with that demand. So don't expect rents to come down quite yet either. Okay, this is a lot of information. What's the take home? If you're a buyer because you need a place to live and you're ready to create wealth and equity for yourself instead of your landlord, let me also add that you have a good job and a good work history and a little bit of savings, then yes, this is a great time to buy. The average 3 to 4 bedroom home in Jefferson County right now rents for $3,000. Even at this higher interest rate, that's around a $500,000 mortgage. Rates are higher right now, but that's helped to decelerate home prices and removed some of the buyers that weren't really in it for the same reasons you are. So it's going to be an easier process. And while rates are not predicted to drop anytime soon, there's lots of loan options that can make buying affordable for you. I can put you in touch with someone who's very experienced and knowledgeable, a great lender who can go over your personal situation and help you find a good fit with regard to your financing. I actually met this week with one of my strategic partners, Andy Jorgensen from Synergy One Lending, and he had lots of great ideas and really good information. So great ideas on how to make new home ownership affordable for buyers right now. Rates are definitely not going to stay up this high forever. So part of your plan may be to refinance in the near future. Have that discussion with Andy or with your trusted lender. But inflation and high interest rates definitely do not automatically equal bad timing for every buyer. So if I can help you to decide if buying or selling makes sense for you right now, please call me because I'm happy to do that. And the answer is not going to be the same for everyone. All right, you guys have a great weekend. And if you're out and about tomorrow, Saturday, looking for something to do, swing on by. I'm having an open house at my new listing in Trailmark, which is in Littleton, 9732 South Carway. It's a great property, 875, beautiful, beautiful area. Talk to you soon.